right, here we go. Welcome back to the Nadlin Forum Podcast Daily. I'm Ruby Sturt, and I'm joined as always by Lior. Today, it's all about, well, not the most cheerful topic, a government shutdown and the rocky ground it puts real estate-heavy state economies on. Lior, it's wild how this is playing out. You look at Florida, and seriously, nearly a quarter of the state's entire economy is just real estate. That's 24.1% of Florida's GDP. Insane, right?
Yeah, that number really jumps out. And it isn't just Florida. You've got Arizona, Nevada, Hawaii, Delaware. It's like these states have built this turbocharged engine out of real estate, construction, tourism, all of that. But when that engine stalls, everything from tax revenue to jobs and development comes to a halt, especially because so much of it runs through federal programs, FHA loans, USDA approvals, and of course, the National Flood Insurance Program. Without those, it's like the gears start grinding to a stop.
Totally. It reminds me, oh wait, this is a bit of a tangent, but I talked to this Queensland developer last year, and he said the scariest 3 words in construction were delayed council paperwork. I thought, yeah, that's the Aussie government for you. But now it's like, imagine the American version, except it's the entire system choking up. We're hearing about Florida agents whose closings are stalled, all because FHA or flood insurance applications are on pause. And in Arizona, delays are even stalling new land developments. It's not just bureaucratic headaches, it's people's livelihoods.
That's exactly it. In Arizona, a lot of the state's growth comes from just this: migration, development, constant buildup. When you hold up land financing, it has a domino effect. Developers pause, workers get laid off, new home buyers lose their contracts. It's the same in, say, Nevada and Hawaii. But with a twist, they're ultra dependent on property investment and tourism. So even a short-term shutdown gets magnified.
And you got to wonder, we talked in earlier episodes about how fragile some of these boom markets are, right? Remember when we covered the inventory squeeze and regional profit disparities? Shutdowns just poke holes in the balloon. It gets messy quick.
So let's pull back the curtain on what's actually breaking down in a shutdown. You hear about SHIUD, CFPB, the USDA. These are just acronyms until you're waiting on a loan or running a closing and suddenly everything stops. HUD is supposed to be there, processing community development grants, approving FHA loans. CFPB, they're the compliance watchdog. They disappear, suddenly there's legal chaos, and no one knows what the rules are. It's not just a minor inconvenience, These are like the little cogs that make the housing market machine work, and they get rusty real fast without movement.
Exactly. Like someone at the top trips over the plug and suddenly you've got thousands of FHA loans stuck in limbo. Or what was it? NFIP? The National Flood Insurance Program? If that's offline, people can't even close deals on properties in flood zones. Honestly, you can't make this stuff up.
Let me jump in, Ruby. I remember when I was moving to New York, getting my mortgage approved. That was stressful even with everything open and running. Imagine that anxiety, but then times it by thousands and layer federal uncertainty on top. No one's answering phones, files don't move. Everyone's just stuck. And with the CFPB not fully functioning, it's even worse. You might end up in some regulatory gray area. Nobody wants that when hundreds of thousands of dollars are on the line.
Yeah, it's easy to see now why the Realtor.com report called the situation a real-time stress test. When federal support wobbles, it just exposes how much the rest of the system leans on it. Anything from mortgage guarantees to insurance. And when you think of the compliance side, if people start skirting rules because they think no one's watching, that could spin out into bigger problems down the line.
That's right. It's not just about getting the paperwork through. It's the structure that supports trust and liquidity in the system. Otherwise, you get uncertainty and everyone pulls back. We saw hints of that last week with credit tightening, as we mentioned a couple episodes ago. Now, it's like the same effect, but triggered by dysfunction at the very top.
So let's talk about what happens when all this uncertainty starts to feed back into the market, because as we read, even the hint of a standstill in Washington makes lenders and investors suddenly super cautious. Loans slow down, cash dries up, capital deployment gets backlogged. Basically, everyone gets stage fright. And fun fact, Feesback CEO Shilan Arrow described it as a feedback loop. Buyers freeze, sellers wait, investors clam up. That's the spiral that spooks entire local economies.
It does. In fact, when the transactional volume slows down, you see it ripple outward. Homebuilder permits drop, construction workers sit idle, and cities start to notice a dip in those tax revenues. It's not just theoretical. There are real numbers behind it. And sometimes, like the CEO said, liquidity starts bleeding from the edges, and then suddenly, even core buyers feel it.
That brings up the cash buyers and luxury segment. There's this perception, maybe fair, maybe not, that they're sort of immune, right? Because they don't need a bank's sign-off and can just skip the chaos. But I always wonder how long that really lasts. If confidence erodes, or if the whole system loses trust for long enough, won't it catch up to even the high end?
Honestly, I don't think anyone is totally insulated. Maybe in the beginning, luxury homes and wealthy buyers can keep chugging along. But if the shutdown drags out, even they'll feel it. Less competition, falling home values, project delays. At some point, everyone is on the same sinking ship. And all the job losses and tax pressures we talked about before, those don't just skip over the expensive zip codes.
Yeah, and circling back, it's a reminder of how, even in a supposed strong market, the foundations are kind of fragile if there's not a stable federal infrastructure under it. If the shutdown keeps going, the stuff happening in Florida or Arizona doesn't stay there. Could be Texas, Illinois, or anywhere next, as Arrow said. It's all more connected than people think.
Absolutely, we'll keep watching it. As always, thanks for joining us. These are strange times, but that's why we're here, right, Ruby? To make some sense out of the chaos.
Right, we'll be back with more, hopefully with better news next time. In the meantime, stay sharp, look after your investments, and cross your fingers for a quick resolution in Washington. Lior, thanks as always, mate.
Thank you, Ruby. Take care, everyone. Until next time.